So VA loans, and a lot of veterans just don't know the benefits they have, and one of them, the VA loan,
Yep.
offers up to 100% financing. The power behind a VA loan, and what you said, what makes it so fantastic for builders, for mortgage professionals like myself, veterans are very disciplined, not just in their day-to-day through the military,
Yep.
but their finances.
Yes.
VA buyers typically have excellent credit. They've got great jobs. They've got cash reserves. They don't need a zero down payment loan.
We already know that a VA loan is probably one of the most powerful tools there is for a buyer, if they qualify, right? And then you add in the new construction side of that. And then you add in the piece that I want to talk to you about today that could be a potential 6 figures in savings.
Yeah.
If they qualify, we could talk about it, right? Jared, your team does a ton of VA loans. You do a ton of new construction loans. So let's pair these all kind of together and make something make sense for somebody that's looking, that earned the right to use a VA loan and wants to buy a new house.
Yeah.
Sound good?
Yeah.
Okay. Just give me the overview, the power of a VA loan. Let's start there, and then I want to get into the specifics of this other piece that somebody might qualify for.
Sure. So VA loans, and a lot of veterans just don't know the benefits they have, and one of them, the VA loan, offers up to 100% financing.
Okay.
And in fact, it even can cover more because there's some funding fees that go with VA, but it's for people who have served our country, either through the military, Coast Guard, even reserves. If you've got points built up in the reserves, you can get a VA loan. But the power behind a VA loan, and what you said, what makes it so fantastic for builders, for mortgage professionals like myself, veterans are very disciplined, not just in their day-to-day through the military, but their finances.
Yes.
VA buyers typically have excellent credit. They've got great jobs. They've got cash reserves. They don't need a zero down payment loan, but they're entitled to it.
Right.
It's a benefit. Yes.
Right.
Yes.
And so, I know we can get into this later, but we were talking the other day about a potential refi, even how do they no cost refi? Hey, they can prove that they're making their payments. There's an accountability piece to it. There's so many potential options, right?
There is. Yep. So the VA refinance loan is called the IRRRL. Not Earl like Earl Grey tea. It's IRRRL as in an acronym. IRRRL, which is an interest rate reduction refinance loan. And essentially the premise behind it is the VA, which is very, if you don't know, they're pro-veteran buying homes. They'll do so much to help them get in, but if the market improves and interest rates come down, they don't force them to go through the entire process again. They essentially look at it and say, hey, if you're in a VA loan now, you've been in a VA loan, you've made your payments on time, you make the full payments, and we can reduce your payment, reduce your interest rate. How is that a bad thing? How does that impact a veteran?
And they don't pay for that either.
No,
right?
and no. Why would they make them go through that process again? So there's some costs associated with it, but that can be absorbed in the loan, into the refinance. But it's essentially, hey, it's common sense.
Right.
If you're making your mortgage payments on time and in full and have been, and we can make them better, why wouldn't we do that?
Absolutely. And so we've got the VA loan itself, and then you pair that against a builder, which you do pretty much exclusive builder loans, new construction, and not just we're not talking custom build, we're talking production wise. Hey, a builder's putting inventory on the ground, or you're wanting to be in a certain community, and you pair those two things together, and it's a supercharged item. Correct.
I agree. Yeah. And clarify, we can do construction loans.
You can.
But new construction is just a brand new home.
Correct.
A builder builds it, they own it, they're selling it to you upon completion. And a lot of veterans don't put that distinction together. They think, hey, buying a new home is a construction loan. It's not. It's a purchase loan.
Right.
From somebody who recently constructed a home. And it's phenomenal. The biggest theme that we saw in 2025 and the first part so far of 26 is affordability.
Right.
Builders are giving a tremendous amount of incentive dollars, whether that be for closing costs, prepaid interest rate reductions, even sales price reductions.
Yes.
They're doing everything they can to make it more affordable, and then compare that or compound that with the VA benefits. It's awesome. Yeah.
Well, and typically, like at least in my experience, when I see builders, so many builders pre-buy these interest rates, right? And they're like, hey, we're doing a 4.99, or we're doing a. It's like when I see them on a VA loan, it's usually a even better rate for a lot of builders, right? It's like, hey, we're doing this on a conventional, but like if you can qualify for VA, it's 0.5% better and stuff. Like I don't want to like generalize, but usually it's an even better rate than what you or I could get.
It is, and that's typical to all VA loans, even in the open market.
Right.
And again, that goes back to the default rate and the discipline for VA loans and VA buyers. They have the lowest default rate of any type of loan, FHA, conventional. They have the lowest default. They're endorsed and insured by the government. So the VA is going to say, hey, we endorse this buyer, we endorse this loan. So there's less risk, and risk-based pricing, you're going to have lower interest rates.
Right.
Now, what you see from the builders is the builder says, hey, if we're going to offer a pre-purchased or below market interest rate, and it's going to cost us X dollars, we're going to apply that X dollar equally across all types of loans.
Right.
And a VA has a better pricing, better interest rate, so they can get lower interest rates for the same dollar they're giving away.
Yeah, and they're not like they can bring in a little bit more in credit into the transaction, whereas like an FHA or conventional, they're limited on interested party contributions, right?
Correct.
That contribution can go up a little bit because it's a VA loan.
It can. Yep. And a lot of people misunderstand that too. The interested party contribution for conventional and FHA is based on down payment for conventional.
Right.
5% or less than 10% down, you get a certain dollar amount.
Correct.
Over 10%, you get an additional dollar amount, and then over 25%, you get additional. FHA is 6%. VA is 4% seller paid, 4% seller concession. So essentially, it is. It's also the only loan program where an interested party can pay consumer debts to help a veteran qualify for a loan. So they can pay off a credit card or a car payment or something like that to help get into that loan. So it's phenomenal.
And again, when we couple that with builders who are already looking at ways to move houses, and the normal consumer, we're getting tons of incentive dollars, right? I told you this earlier. I tracked all of mine for this year. And my transactions, I pulled almost 7 figures in incentive dollars for our clients. I asked you about yours, and I think yours was way more than mine, but you do a ton more volume in loans. You want to tell me? Can you tell me?
I can. So with the approximately 360 families that we helped last year, between all builder concessions, it was close to $10 million in incentive dollars that were leveraged through a partnership. So builders, they give dollars away and try to make things more affordable.
Yep.
But when you're a preferred partner, there's a track record of guaranteed success.
Yeah.
They try and incentivize those more. So we helped.
You said almost $10 million.
It was $10 million. Yeah.
In concessions or credits to like that.
Yeah. So essentially, all the people buying homes, they saved $10 million of their out-of-pocket dollars that would have otherwise gone into the transaction.
That's awesome.
Yeah.
And especially when you compare that with a veteran and a new, like those two together, there's a third piece of this that I just recently learned about that I think I want to talk a little bit more about. It's the Special Adaptive Housing Grant.
Yeah.
It's a grant, right? Yeah. So talk to me. So this one, and I'm going to clarify, and I'm going to ask you a couple questions on this. This is a very specific line within the veteran community. Not everybody qualifies for this, but if you do qualify, it could be an even bigger savings on top of what we've already talked about that every veteran would qualify for.
Correct. So
what is it?
With the VA loan, if you've got service-related disabilities, and anybody with a disability knows that there's a percentage associated.
Correct.
10% or more will waive your funding fee. In Texas, if you're 100% disabled, you don't pay property taxes.
Okay.
You can still pay your PID.
MUDs and PIDs are still going to have to be paid.
Correct. But your general jurisdictional taxes are waived. Between 50 and 99%, there's reductions on your property tax. So there's already benefits for those who have come back from service with disabilities. But the Special Adaptive Housing Grant is money that the VA will give so you can modify your home if your service-related disabilities are like loss of limb, loss of eyesight, you're in a wheelchair.
So something that would need to make a house more ADA compliant,
Correct.
right? So like wider doors,
Yes.
roll-in shower. So anything that you would like, if the ADA would say, hey, this needs to be in this house, you would need that accommodation. There's a grant to potentially make that happen.
Correct.
And so what a lot of people would assume is, hey, I have to buy a pre-owned home, and then I have to use this grant to potentially remodel a house, right? But what we're saying is, could you pair this with a builder?
Yes.
And so here's my thought. Like, it would probably have to be a to be built. It probably couldn't be an inventory home, right? Because they would have to make those modifications on the plans. And then you could use that money as a grant to lower then your loan amount, right?
Correct.
Okay.
Correct. So the SAH or Special Adaptive Housing Grant in 2026 is up to $126,560. So
Six figures.
Correct. So that's money that the VA will give to a home buyer, a veteran, to modify their home. And you said something that it's probably easier in a home that's being built because it can be designed from the very beginning.
Correct.
However, I would think that the cost to modify some doors, maybe counter heights, things like that, on an existing home, or a home maybe that they didn't start building but that's still under construction.
Yep. Could be just modified. Depends on where they're at in that process, right? And so to be clear, this is not a, hey, you have a rating on a disability, you are guaranteed to qualify for. This is an additional step that is in, like, I don't get to determine eligibility. You don't. It's like fully through the VA.
Correct.
Eligibility has to be determined, and I'm sure there's paperwork that's going to have to be involved. Plans are going to have to be submitted, but if they can qualify, it's up to $126,000.
Correct.
But then, and of course, the builder has to say yes to making these modifications to their plans, right?
Correct. And I will tell you, without being definitive, most of the builders that we work with are very pro-veteran anyway.
Yep.
They've either built and donated homes, they've got charitable contributions that go to veteran entities, and of course, this is just a modification of a home that they're proud of already.
Yep.
So to make those few changes at the VA's discretion and contribution is probably something most builders would do.
And to be clear, this is not a loan. This is an act. This is a grant.
Correct.
So like the way I would understand this is if you qualified, let's say you're buying a $500,000 house, you work with a builder that says, hey, we will make these adaptations to what we need them to be. Then the VA gives you this grant. Let's just say it's $100,000. So they would roll that in toward the builder. So now that $500,000 house basically becomes a $400,000 house that you're carrying a significantly lower monthly payment on.
Correct.
That's incredible.
It is. It really is. And most of the time, if it's done, like you said, on the new construction to be built, we're going to buy dirt, we're going to plan it out, we're going to sit with a builder and design our home. Those extra doors and the cost that they might have to be a little bit bigger, or to have a bathroom extended, or a ramp for the front doorway, something like that. Those costs, when they're done at the very beginning, become much smaller than replacement costs of doors that exist. So you can stretch those dollars a lot further when you're sitting down with a builder going through the design phase.
And it could be like, if you didn't use it all at once, it's a lifetime. I've been reading about it. It's like a lifetime grant. So like, you don't have to use all of it in one single transaction.
Correct.
You could spread it out or do multiple things. There's an interesting thing about this. So I was looking, because everybody's like, hey, what's the practicality? How do you do it? So I looked it up. It's VA Form 26-455. That don't mean anything to me. I'm sure it doesn't mean anything to you either. But that's the form to see if you qualify. It's VA Form 26-455. There has to be approval with the VA that you qualify for this. There has to be approval of plans, and so everything has to be submitted. So it may add a little bit of time to the timeline, a little bit more nuances back and forth. But for the kind of money we're talking about, it's definitely worth it.
It is.
Especially if you earned, like, you served our country and you earned the right to this money.
Correct.
let's go get it. Like,
correct.
let's
And
let's
you know, the
let's go use it.
caveat to that in terms of like the extra steps, you know, without being disrespectful, most disabled veterans know that they've got a disability.
Right.
The VA knows that they've got a disability. So most people that would qualify for this probably know that they would qualify. They just don't know it exists. So filling out a form and getting with the VA, that part's probably the easy part, but it is making sure that the builder is willing to adjust those plans, resubmit permits, things like that. That's where some of those extra costs and why the VA offers that, because they know, hey, a veteran is going to need these accommodations. Let's find a way to get them.
Yeah, and again, I think it. So even with adding all three of those things together is like the ultimate. I mean, if you have all three of those, like the new construction house, the VA loan, and a special adapted housing, I don't know of any better product out there.
No.
To buy a house in 2026.
No.
To be honest, and even if you don't have the third piece that I just learned about, but you have those first two pieces, those are those. To me, if you can use it, you should be using every bit of it all the time to get into a house.
I would think so. Yeah. And you know, like you said, great resale market out there. There's a lot of people who have homes to sell. But what we've seen is with the builders building the homes they have and trying to just keep up with the pace and the demand of the growing population, they are doing a lot to make homes affordable.
Correct.
And it's tough for you or I selling our house to give $30,000 or $40,000 from equity that we built up.
And two, like the reason I spend so much time in this space is like it's so much easier. It's like when you're looking at a resale, like if I wanted to buy your house, I have to negotiate against all the emotions of you and your wife, and our kids grew up here and we remember all the memories, and we bought this one can of paint so it makes our house worth way more than our neighbor's house. And it's like, I don't want to deal with your emotions. When I go to a builder, it's like, oh, it's just numbers on a spreadsheet, and I can remove emotions from one half of the conversation. And yeah, we're emotional, you're excited about the thing that you're getting, but the builder, like as bad as it's a transaction.
Yeah.
Like there's no emotional attachment from the salesperson or their management to 123 Main Street.
Yeah.
Right? It's, hey, can we make these numbers work? Can we get a house sold? Can we get a family into a home? Well, yeah, can we do that? Sure, absolutely. And we're seeing, I keep saying this, and I'm going to keep beating this drum. Builders are heavily incentivizing buyers.
Yeah.
To fight the affordability as best as they can.
Yes.
They're not going to give it away.
Correct.
They're still going to make money.
They have to.
And we want them to, because we
do.
want good builders to continue to exist in our market, to continue to build up quality homes. I want them to make money, but they're willing to be generous right now in a lot of spaces within reason to make homes make sense where they can.
Yeah.
Which is why they come to you and spend millions and millions of dollars to buy these rates, right? Like to give people, hey, the difference between a 4.75 and a 6.25 is several $100s a month.
It is.
Plus the closing costs to lower your cash to close. Why would we not?
Exactly.
You know? Okay, last thing, and then we'll wrap up on this. So if you're a veteran watching this or you have questions, Jared's link, his contact information is always down at the bottom of all of our videos. Reach out to you directly, have a conversation. Okay.
Please.
Yeah. Even in especially if you're going new construction, and just talk to his team about what it might look like to potentially pursue an SAH if it's available to you, but even if it's not, using that VA eligibility, partnered with a new construction home.
And we can let's just put a link at the bottom that has a straight to the
VA.
SAH.
Yeah, we will add that kind of to the bottom of this video too. So hey, I appreciate that. I want to continue to serve our veterans. I know you want to do the same. So if you guys have questions or you're looking here in the DFW market, we'd be honored to be a part of your journey and your transaction.
Absolutely.
Good deal.
Yes.
Appreciate it.